3, 2, 1. Vernon Baxter, you are the Managing Director of Investor Publishing. Welcome to the Care Home Show.
Thanks, Owen.
Absolute pleasure. Really good to have you join us today. So let's start at the top. So have I got it right that your entrance into the healthcare sector, was that through Investor Publishing, or kind of how did that all come together?
In the UK, yes. So effectively I joined Health Investor almost 11 years ago, which feels longer, but it's...
You must have been 16 at the time, right?
Yeah, man and boy. But before that, I actually worked for a year in Dubai.
Okay.
So it was my first job after university. I went to work for a large publishing company out there called ITP, and I actually worked for a magazine that was so successful it no longer exists, called Medical Times Middle East.
Okay.
So it had a healthcare element to it, but it was much more aimed at the healthcare practitioners, and it was around the time that Dubai was spending a lot of money attracting people like Moorfields and Great Ormond Street to set up in places like Dubai Healthcare City.
Sure.
So I had healthcare experience, but not really through a finance perspective. But I moved back to the UK in around July 2008 and was doing a bit of freelance, and then eventually managed to get a role as a reporter at Health Investor.
Okay. And tell me a little bit more about the story about how that's kind of come together, because you've been there a while now. There's got to be some stories in there.
Staggering lack of ambition has kept me in the same place. No, so when I joined Health Investor, it was a very interesting time in the sort of global economy. I actually joined in September 2008, and I remember I also moved to London for it. So my first experience of London was seeing the news reports about Lehman Brothers collapsing. It was literally the week where people were leaving their jobs with their kind of passes turned off and their belongings in boxes. So it was quite a scary time to join a magazine with investment in a title. And so I remember thinking that my first week might also be my last week when we first started. But thankfully, it hasn't worked out like that. And through the last over the last sort of decade or so, I've been able to be part of an organisation that has evolved quite considerably, but actually still it's still kind of true to its kind of main kind of concept or founding purpose, which I can maybe tell you a bit about if that's...
Yeah, absolutely. I mean, I think it'd be really interesting just to find out, for anyone that doesn't know, I'd imagine most people watching this are gonna recognise you and understand what Health Investor does. But for those people that don't, paint a little picture about what that looks like.
Sure. So Health Investor was started in around the end of 2004, 2005. And I think the context for people to understand is this was sort of well into New Labour. Health spending had been incredibly increased over that period. Alan Milburn was Health Secretary at the time, and there was a real sort of attitude of investment in from a kind of public spending point of view into the health service, but also to try and disrupt the kind of the NHS. There was a lot of involvement or engagement of the independent sector for the first time. So there was a wave of programs such as the ISTCs, which was independent sector treatment centres, and there was all this reform going on in the public service that actually motivated Health Investor's founder, Harry Hyman, who himself was quite a well-established investor into the healthcare sector through a primary care investment trust called PHP, or Primary Health Properties. So Harry's idea for the magazine was that there were lots of magazines about healthcare, lots of magazines about social care, but there wasn't really one that was written for his community or the investment community. So the founding principle or concept of Health Investor was to try and take sort of broadsheet levels of coverage and apply it to UK healthcare investment activity. So very focused newsletter style approach originally, and from that we've kind of evolved the model and evolved the magazine. But still, in essence, that's what Health Investor is there to do. We're there are lots of very well-established and really great publications that write about policy, that write about the development of healthcare from a kind of pharmaceutical or from a kind of treatment point of view. Really what we have is a very kind of narrow focus this is just with Health Investor, I'll maybe talk about the rest of Investor Publishing later, on the kind of corporate activity of UK healthcare. And for us, social care has just been a really large part of that, because as you will know very well, and a lot of people in your community will know, is that the independent sector is very well established in social care, whereas in healthcare, it's a much more kind of complex and much more sort of probably difficult relationship between the private capital and the public sector, whereas in social care, it's a really well-established investment community. Mm-hmm. So from the outset, what we've tried to do is look at the world through how does this impact the investment case for UK health and social care. So if a deal happens, if there's a change of government or a change of health secretary, if there's a change of regulator or a change of position, we don't think about it in the same way that a kind of dedicated health or social care title would. We think about it through the prism of how does this impact investors? How does this impact the investment community?
Got you. Okay, understood. That makes sense. And thank you just for kind of mapping that out. I know that there's awful lot going on at Investor Publishing. Explain for the audience just a little bit around what that looks like, because obviously there's plenty going on for you guys at the moment.
Well, I'll try and keep this predominantly to how it impacts social care and healthcare, because obviously that is the focus of today's conversation. But Investor Publishing, as I said, started life just as Health Investor, and over time, around about 2009, 2010, we launched Education Investor. So as a group, Nexus Group, which Investor Publishing is part of, it has a long-term focus on health and education as the two markets it wants to be in. Mm-hmm. I think there's lots of good reasons for that, but I think, just to quickly summarize, is that the two markets that are as close to being essential to society as you can get. I mean, I think if you look at the analysis of countries as they get greater wealth, predominantly the first two things that they spend their money on are improved healthcare and improved education. It's just a kind of natural human instinct to improve how we look after each other, and also to improve the education and the opportunities of the next generation. It's just a natural instinct that you see getting played out across the world. But I think if you look at the history of both markets, because of that essential nature, it's predominantly been seen as a state or a public sector market. And I think actually some of the most amazing institutions in the world have developed out of that. You look at the National Health Service, you look at some of our universities and the way that they have developed. So that is fantastic, and that is why there's an entire world of publishing and events and media that focuses on the public sector and those in health and education. But I think long term, the cost of maintaining quality and service in demand for health and education is vast. And I think what you're seeing in nearly every developed economy is that the mix of public and private, both provision, but also how the two sectors interface, is changing quite rapidly. And so I think for us, that development or that kind of friction or interface between public and private sector in those two key sectors, it's a real great opportunity for both media coverage, for investment, for corporate finance activity. So health and education are the two areas that we focus on. So that's why we launched Education Investor in 2010. But over the years, how we've tried to serve those two communities has been twofold, really. We've tried to be a kind of trusted information source. So we hire journalists who are independent, who are able to write about the sector with kind of no restrictions. And we ask them to report aggressively at times on what's going on in the market, so that we're finding information before it's out in public release. So we're finding hard to get information, and we're providing it to a community that wants to know what's going on. But secondly, and this has in time become a kind of bigger part of our business, if I'm honest, is that through our events and through things like thought leadership and partnerships, we've tried to develop a role in the market where we help to build those communities. And those communities obviously existed or were starting to form before us. So, it's not something that we've invented, but what we've tried to do is we've tried to help those communities do business, or to act as a facilitator. So through things like the Health Investor Summit or the awards or things like the Power 50, what we're trying to achieve is, yes, we want to run an event and bring people together, but the underlying rationale for why would someone come to these events and why do we host them is to kind of help people understand their universe a bit better, help those who might not know who the key players are to come along and to interact with them, but also to help the key players affirm their kind of position and show their knowledge and showcase their kind of understanding of the sector. So I always think of our kind of purpose as twofold: a kind of information supplier at one hand and an active kind of media organization, but also as a kind of to be as a servant to this community and be a facilitator. So that led to us, that thinking, that focus on health and education, and that ambition to try and help the market function, or help the market consolidate and grow and mature, led to us doing an acquisition earlier this year for a company called Hawker Publications, which, just like us, had been going for a bit longer than us, had been going for pretty much exactly twice as long, and was founded by Dr. Richard Hawkins, who I'm sure many more people watching this will know who Richard is than know who I am. So I won't give him. He needs very little introduction. But Richard created Caring Times, which is a magazine that's been going to the care sector for the last 28 years. One of the most, if not the most, established magazine for the care home sector, and it's really kind of aimed at care home managers. So Caring Times and Health Investor for us seemed like a really complementary combination to put together, because at one level you've got the kind of investment, professional advisory, sort of capital side of things, and then with Caring Times you've got the real kind of sharp end of what it's like delivering care. And I think how these two communities, or how they interact, how they better understand each other, how they interface, again to use that word, is something that's really important for the sector. And now that we've done this acquisition, that gives us a lot of scope to develop those communities. I think the other two titles that Richard has built up, again, I said I'd focus on the social care stuff. One is called Nursery Management Today, which has obviously is aimed at early years and the nursery sector, which I'm trying my best not just to immediately compare it with care homes, because that's one of the things that I just about understand, but it has a lot of similarities. It's quite a fragmented market. Property plays a really important role, and so does quality and regulation, because of obviously, again, you've got vulnerable, a client base or a user group that is vulnerable and requires high levels of regulation and oversight to ensure that safeguarding takes place. So that's a very exciting new development for us. And it fits quite nicely with our education investor title as well. So we've already started doing events that interface between the two. Mm-hmm. And then thirdly, there's the Journal of Dementia Care, which is a real passion project of Richard's. And over I think the best part of 13 years, the JDC has built up a really respected position in the market around dementia care. So dementia is obviously a massive part of the sector and a massive problem or issue for society to react to. The JDC, what it focuses on isn't so much the kind of pharmaceutical level, but more about how the individual is cared for and how that's best achieved, what the academic thinking is about how individuals in that kind of state of mind are cared for, and what good looks like, and they've built up a very respected event called the UK Dementia Congress, which we're very excited to be running for the first time this year in November, along with obviously the existing team that came over from Hawker and joined us at Investor Publishing. So as you can tell, it's quite a lot going on at Investor Publishing at the moment. So
just a little bit, yeah.
Yeah.
I remember, I can't remember who told me, but somebody told me a while ago that Richard was thinking about kind of retiring and things like that, and I wonder who.
It was probably me who told you.
It may well have been actually thinking about it, but I remember somebody mentioning it, whoever that person might have been, and thinking to myself, well, I wonder who would buy. Obviously, there are some key players, but I remember again, it might be in a conversation or kind of a press release, but I remember finding out and thinking that's a good thing. I think for sure, you can see there's obvious synergies there. So exciting times. I know you've been very busy with doing the whole integration piece and making sure that everything comes together well. But firstly, congratulations on the acquisition, and very exciting times ahead.
Yeah, definitely. And just quickly on that, the integration piece, I think what Richard had built up is a really strong team that have come in. So it's been, in some ways, the integration has been easy because they've kind of just, we've learned as much from them as it hasn't been that we've tried to kind of foist Investor Publishing's way onto a whole bunch of different magazines. But what I just wanted to briefly say, just so that it's kind of clear to anyone watching this, is that our vision for the combined group is not to kind of fold everything into one sort of brand. I think for us, Investor Publishing really wants to be an umbrella organisation to support Health Investor, Education Investor, NMT, Care & Times, and the JDC, because I think all of these brands have great value in themselves. So what we really want to do is invest into them to grow there and better engage with the different communities that they offer. I think there's lots of sort of underlying operational things that are benefits of having a group that can service all these different brands. But I think what's important is I never had a vision where Health Investor would subsume Care & Times, because I think the strength of the two brands and the strength of putting them together from an organisational sense is your ability to invest in them kind of separately. And there's lots of crossover, but I don't want to put them closer together. I want to kind of grow them independently.
I think that makes a lot of sense. As you say, individually they're all very, very strong brands. It's a case of on both sides, from the kind of previous brands of Health Investor and then the new ones from Hawker Publishing. It's taking the good work that's been done already and then helping take it to that next level. So I think that makes an awful lot of sense.
And it's about things like investing in digital, because I mean, for smallish publishing companies that can be quite a painful kind of experience, but once you have scale, it makes a lot more sense to be able to so we're going through that process at the moment, which is quite exciting. So we're looking forward to revamping, and I think all of the brands will benefit from that, and it just helps you kind of rethink or rebase or reconfigure how you interact with the communities that you're trying to.
And again, it is taking that. You've got a wonderful platform with the various different titles and things like that. It's okay. So how can we make these things better? Again, from a business infrastructure perspective, but then also from a content, from a branding perspective, and just taking things to the next level. So again, exciting times. It's
Indeed.
Again, I said earlier that you're weathering it well. I think any normal human would probably be integrations are tough, aren't they? This is the nature of the beast. But it sounds like you're doing a fantastic job, you and the team. So it's a good work, and congratulations again. So you've touched a little bit around kind of the vision for Health Investor. Break down what that looks like a little bit for me, because obviously this is the platform for exciting things ahead. The horizon must look like a very interesting place for you at the moment.
Yes, and in fact, there's lots of different ways you could go with a business like ourselves, and with certainly the brands that have now joined us. But I think what we appreciate is that over the last 14 years, we've been able to almost grow up with the sector. I remember, I think when I first joined the Health Investor, it was still relatively new for the advisory firm to even have something like a head of healthcare. Previously, it was just someone who worked on a lot of deals, and some of them happened to be healthcare. And I think what we've kind of seen as the market has consolidated, obviously not in a kind of, it hasn't sort of happened in a straight line, and there's been ups and downs, but the market's starting to mature. And I think as that sort of maturation happens, I think our vision is to try and deepen our roots into the sector. And I think one of the ways that we want to build on the acquisition that we've done recently is to get a really great understanding of the market itself, in terms of our database, in terms of understanding who is in the market. Because I think what anyone who is familiar with the kind of networking that happens in our sector is, at one level, the sector is very well networked. There is a close-knit community of people who are very much kind of super connectors, and that is fantastic at some level. But I think what most people would also concede is that there's a large part of the sector that's yet to be involved in that kind of community. And the stats change all the time, but if you just take elderly care, the number of the market share of the kind of top 20 providers is still relatively unconsolidated, and so our kind of long-term vision with Health Investor, Care in Times, with this UK community, is to be there and to help, going back to my earlier point about how the market facilitates and how it grows, how it talks to each other, and it's to be there as a kind of a partner as best it can. I think in terms of the vision for the wider group is that, like I said, providing information and building communities is the two things that I think we're here for. Mm-hmm. And inevitably across health and education, while there are some universal or kind of similar trends to how those communities are developing, there are also some significant differences. So in Education Investor, we found the natural way that brand is developed is to be a very international business. So our coverage typically, we typically cover English language education, but that can take you from South America to Asia to Africa. Mm-hmm. It's a really global market. So I think in terms of how we approach this community is that we don't want to lose sight of where we've come from, and I think UK healthcare, UK social care is where our heritage is, where our kind of contact base is, and now that we want to invest into better understanding it, and to work as well as possible with the partners that we work with. Mm-hmm. And I think one of the great things about my job or our organisation is this sounds I would say it because they are our clients, obviously, but the clients that we work with, by the nature of the type of organisation that we are and the type of sector this is, are genuinely experts on the market. So the amount of benefit we get from working with our client base in terms of understanding their view on the market, understanding their own client base, understanding the pain points that they're seeing in the market, understanding the opportunities that they see in the sector, it really helps inform where we should be going and helps inform the type of content and the type of events that we should be putting together. So I think our vision is to really try and, as I say, sort of deepen our roots in this market and be there as the market consolidates and as it grows, and to evolve with it and to be as relevant as possible to the people that we work with and the people that might want to access this market and don't know about the sector.
Mm-hmm. I guess the most important thing about that is the community, isn't it? It's how you best serve that community with the kind of the insights, the kind of publications that you share, the events and everything like that. It's reinforcing all of that as you say, as the market evolves. So, yeah. From the perspective of, well, what does that practically look like? How are you actually making that vision together? What's happening to achieve that vision at the moment, if you like?
Yeah, so we're doing a lot of work behind the scenes on quite a sort of boring stuff in some ways about like CRM and organising, because what we've got is Richard's business with 28 years of interaction with the sector, and you've got Health Investor been around for the best part of 14, 15 years. So there's a lot of crunchy stuff putting those organisations together, and thankfully that's kind of people far smarter than me in the organisation do all the complicated bits. I just get to do things like this. So at a kind of back office or sort of database perspective, we're doing a lot of work to kind of build that, because I think that's really the engine of a business like ours, is if you get that right and you get your community well documented and well serviced and up to date, then that database can kind of power everything we do. Mm-hmm. But I think we our kind of our core activities are events and information, and that is obviously a large focus of ours going forward. But I think we're also really open to working with partners in different ways. I mean, I think as I said previously, the sector is blessed in the sense that it's got a lot of people with a lot of expertise in the market. And I think we want to kind of work with clients, work with partners to find different ways to disseminate that information or to provide events that are quite engaging. I mean, one of the models that the Nurseries magazine employs is a kind of speed dating agenda style series where they take people to kind of golf course hotels and lock them up for a couple of days and 15-minute meetings, and it works very well. And that might not have direct application in every market, but I think we're open-minded to evolve in the ways that we try and interact with the community. So at one level, it's investment into how we better operate, but really I think the best way is to improve the way that we have conversations with partners, improve our dialogue with the sector, and try and be guided by the market as much as you can be.
That makes an awful lot of sense. Thank you for obviously explaining what's going on at Health Investor. There's obviously been quite a lot to unpack there. I'm really interested in your insights, because I love interviewing people that have got a unique perspective on what's going on within the sector. So an important question that I think you're really well positioned to be able to answer is, so how do the decisions and actions that the investment community make impact the health and social sector as a whole?
Yeah, so I think what's interesting about this topic or this question is that the good Health Investor, going back to kind of where it was originally founded or the original concept, is that we kind of broadly think of 3 or 4 communities that we need to be talking to. There's the people that run the health and care businesses, the operators. There's the investors who predominantly will be buying and selling those assets. And then there's the advisory community, and then there's the lending community. I think what I find endlessly interesting about the sector is how the actions and interactions of those 4 different communities can impact the sector. I mean, going back to when I first started at Health Investor, it was, only just over 10 years ago, but it was a very different market to it is today. So obviously there was the wider macro economic sort of stuff with the subprime and the crash, and obviously quite difficult recessionary period for the UK and for care. But actually, if you look at who were the active players in the market, it was quite a different sort of sector. Private equity had probably been the predominant consolidator in the sector for pretty much the last sort of decade or so. So a lot of the businesses that existed in the sector had been grown very quickly and quite often sold on to another private equity business. And there'd been very rapid consolidation. And the type of capital that was active in the market then was the type of capital that would want to fund that acquisition, but also leave relatively soon. As private equity typically, these definitions have been changed or broadened due to sort of wider economic factors, but typically they would have wanted to be in for 3 to 5 years. So that means doing a lot quite quickly and pursuing quite aggressive kind of growth. And in many ways that was very good for the sector, because it allowed, a subscale community of smaller operators to become more professional, to become bigger, to be able to invest at a group level, all things that wouldn't happen without investment. But I think the flip side of that is when you see some of the pain points in today's market, you can almost trace a lot of them back to some of the financial structures that supported that period of consolidation in the sector. So, the obvious example would be Four Seasons. Four Seasons, pretty much since I've been covering the sector, has almost been going through a period where it's been refinancing debt that it essentially took in 2006 as part of the Qatari 3 Delta investment into the business. And so what I think's important for people in the sector to have a kind of understanding of, or understanding is maybe not the right word, awareness of, is that the impact that investment can have for health and social care can be really profound. It can be incredibly positive in that it can help organizations grow, it can help fund professionalization, it can help fund quality, it can help advance, service proposition and really kind of develop the sector. But it doesn't always go right. And when it goes wrong, it can act as a real brake on the sector, and it can act as a real problem from a kind of public perception or a regulatory perception, because things like the situations around kind of Four Seasons and before it Southern Cross, which was obviously a massive story that I covered when I first came into the sector. It kind of reverberates both through the ages in terms of the legacy of the finance and structures that it leaves behind, but also it can have really material impact on investment appetite for this sector. You know, it's in some ways such a compelling market to invest into, but people who invest into the sector, you know, everyone has a boss, right? And someone has to get that deal signed off. And if the last headline the person who's signing it off has seen before that is put on their desk is, you know, another care business in administration or a care scandal, then it can be very difficult for people to get comfortable with releasing capital into this market. So I think what I've seen over the years is there's been probably a gradual change in the type of capital at play in the sector. You know, private equity has multiple benefits, but you could maybe call it in relative terms short-term capital, because it's kind of seeking an exit almost as soon. It has an exit plan before it buys into a business. I mean, that's just how it works. It has a strategy to get in, create value, and exit. Whereas if you look at the type of money that's coming into the market now, we're seeing much more money from real estate investment trusts, both domestically, where you see people like Target and Impact and other kind of structures popping up like Elevation, and you know, we haven't spoken much about the impact of the American capital into the business into the care sector, but their entry into the market circa 2013, 2014 had a huge impact on the private pay care sector. I mean, the activity of businesses like Welltower or the healthcare REIT, as they were called then, you know, they consolidated very, very quickly and quite aggressively, and it sort of changes the face of a market when money like that comes into the sector, because they're not looking to exit in the same way that a private equity firm would. They're looking for a long-term relationship between the property business and the operating business. So I think a check isn't just a check. I think who writes it is important. I think that the type of money that is funding the sector has a correlation with how the sector operates, and that can either be a very, very positive thing because you've got long-term capital that will invest into businesses, such as the infrastructure funds that are coming into specialist care. But then also it can be very difficult because you might have money that's come in that is based on a real estate investment that is 15 to 20 years long and based on an assumption that a care home will be able to pay an increase in rent for the next 15 to 20 years. And those assumptions sometimes don't play out, and quite often don't.
Talking about kind of underlying assumptions and trends, I think probably an important thing is to talk about economic cycle. So you joined Health Investor back in 2008. The world was basically teetering on the brink or starting to turn to custard, which was obviously an interesting time for everyone, not least the healthcare sector. But where do you think that we are in our economic cycle at the moment, and then what impact do you think that has on the overall sector itself?
I think it's obviously incredibly difficult to know. Otherwise, you know, I think people would avoid making mistakes. I mean, you know, I think investment is a science to some level, but I think there's also a great degree of luck or fortune or timing is incredibly important. And obviously, I wouldn't assume to sort of predict how a market was going to evolve. I mean, far smarter people than me try and get it wrong. So, but I think going to your question about where we are in the cycle, I think it's a very interesting question because the sector, if you look at the deals that have transacted in the market, you would be tempted to say that we're looking at a very kind of hot market where the pricing that people are achieving for selling their businesses are probably around the level of kind of 2006, 2007, which is really when the market was approaching probably its kind of peak. And that, you know, you might be tempted to say that therefore this is our sort of harbinger of doom, that the fact that businesses are going for 15, 16 times. But I think you need to look at the type of people buying the businesses and the type of businesses that are transacting to kind of understand whether or not this is a sign of good, bad, or indifferent economic climate. I think the kind of mainstream care market, you could arguably say that the four biggest players have been on the market or for sale or involved in processes of different types for the best part of 12 to 18 months. I mean, some longer, but broadly speaking. And so you could say actually this is a very difficult time to sell a business in the sector, because there's a lot of uncertainty around funding. There's a lot of uncertainty around politics. I mean, there could be a new government, by the end of this year. There could be another election. The process of leaving the European Union is incredibly difficult to predict how that is going to unfold. So there's a lot of reason for investors to say no at the moment. And I think that is having an impact on the sector. I think there are people who want to deploy money into the sector because they believe in its fundamentals, but they also don't want to be the people who bought at the top of the market, and they don't want to be the people who bought just before a fundamental change occurred in the sector. So going back to the deals that have happened, I think the characteristics of the type of deals that have allowed for high multiples, I think if you look, it's predominantly been in areas like specialist care. So if you look at businesses that have come into specialist care, they've come over from infrastructure fund. I mean, that's not the case in every single deal, but there is a definite trend where infrastructure capital has targeted areas of the market like specialist care and decided that they fit the criteria or have been, I think the phrase is infra-like, as in these investments are considered essential services. They're considered long-term in the sense that there isn't really a way that they would that need would disappear. And that allows businesses to come in and pay quite a high multiple, because their plan isn't to sell them in 5 to 7 years. Their plan is to own them either in perpetuity or to sell maybe 10, 15 years down the line. And I think that's a real positive for the sector to have that type of patient capital coming in. Mm-hmm. But like anything, it sort of depends on how much those characteristics remain the same. And while something like specialist care, people's acuity won't change. There's a requirement to service that sector, but will funding remain the same? There's a lot of debate around how people are housed who are being treated for things like learning disability, whether or not, what sort of institutions they should be in. The CQC has been quite a kind of problematic relationship with the investment community about what is the right type and location of these kind of facilities. So I'm in some ways, it's very positive to see that kind of money coming into the market, but you also do worry that these long-term assumptions might not be as sound as they appear when you're entering a sector.
Mm-hmm. And I guess because of the, let's call it a turbulent time, or at least has the potential to be an even more turbulent time, it creates uncertainty, and obviously that's going to have its implications, isn't it, on everyone again, not least the healthcare sector again.
Yeah, and I think this is where healthcare benefits from a kind of relative or a perception of healthcare being a relatively defensive market. So I think, again, this is probably above my pay grade, but if you look globally, there's kind of more firepower or more money available to invest than there has been almost at any other time. This is kind of a consequence of things like quantitative easing and other kind of monetary fiscal policies to try and stimulate economies that have basically been pretty flat. So that has an impact when there's a lot of people sitting on money. Then someone once said to me that investors get sacked for two reasons. They get sacked for making bad investments, and they get sacked for making no investments. And it normally takes longer to work out when someone's made a bad investment than it does when they're not spending their money. So I think that
good analogy. Yeah.
Yeah. So at a human level, I think that is driving a willingness to deploy capital into the sector, because you could point to any number of headwinds in the UK that might put you off investing in it. So you've got, not to recover them, but Brexit, government change. But then you look this morning, Medical Properties Trust, a large US REIT, has made a kind of 440 million investment into Ramsay Hospitals, an Australian provider running UK operations. So I think for me that shows that, despite the challenges, despite the kind of difficulties in this market, there's global capital that wants to be active in this sector because UK is seen as a good place to be, again, relative, and healthcare compared to other asset classes, again, is quite attractive. So I think it's easy, depending on the mood you are in or the attitude you want to take, you could see this as a very difficult time for the market, or you could see this as a very positive time. It's quite difficult to have one answer.
Mm. Well, thank you very much for your perspective on that. I think because of the where you sit in the world and because of the conversations that you have, I think that's quite people would appreciate your perspective on what's going on economically. So thank you very much for explaining that. So one important question, and this is something that I think about quite a lot: how does media in all of its forms kind of engage, and how does it engage with the health and social care sector?
Yeah, this is an interesting topic, and one that I have had many discussions with kind of key people in the market about, because I think there's a sense of frustration among the kind of leaders in health and social care, maybe in social care in particular. I mean, I won't go too much into the distinction between healthcare and social care right now, but generally speaking, I think social care thinks, rightly or wrongly, and probably quite rightly, that it gets a bad press. That you typically read about social care when something goes wrong. You read about social care when there's been a care scandal, or there has been a major operator is in a poor financial situation, or it's an article about how underfunded it is. So there's very little mainstream coverage of the sector that doesn't fit into one of those kind of three buckets. I think that's difficult because at some levels it reinforces the kind of concept of social care as a kind of poor relation to the health system, and I think this isn't just a perception thing. It's people are funded less, they're paid less. It is definitely the weaker relationship to the NHS and all the great work that does, and this isn't a kind of parity thing that they should have parity, but it's just a quirk of how the two systems have developed. And so I think what's interesting from a media point of view is that social care is quite rarely represented in the mainstream media, and when it does, it's normally in relation to those kind of negative points that I was discussing. And I think what that drives for the mainstream is a kind of negative perception with the market. And secondly, I think there's a lack of understanding on how social care actually works and how it's funded. I mean, I obviously this is anecdotal, but I've been doing my job for 10, 11 years, and obviously, when I catch up with my friends or I go to weddings and I explain what I do, I kind of normally met with slightly sort of glassy-eyed expression and then people stop talking to me because it's not. A lot of people don't really understand that social care is something that you're going to probably be paying for. They think, I'll get sick, the NHS will look after me. I think it's only when your family goes through that situation that people start to learn how the system works. So I think a common conversation I have with executives or chief execs of care groups is, why does the media never write positive stories about care? And I think, not to be pessimistic about it, but having, I'm not sure I still count as a reporter or I still qualify, but having worked in newsrooms, having worked as a reporter, it's the instinct of someone who's writing about news is to seek out when things have gone wrong. If things are going well and the status quo has kind of been maintained, it's very difficult to kind of classify that as news. So I think the kind of good news stories in the sectors are quite hard for a reporter to kind of push to an editor and get run. And I think that is quite rightly frustrating because, for those in the sector who want to be evangelists for the great work that's done, they can quite often, be met with kind of stony silence. I think that's quite frustrating. But I think the kind of interaction with media is really crucial, and not just because, we're a media organisation, and I would say that because it has reverberations through both social care, both through investment into social care and into kind of the public perception. And I think the sector has to do a better job of articulating its position, articulating its importance going forward. I mean, you look to the future, depending on what statistical stats you look at, there's kind of no way that the kind of social care and our community won't have to play a bigger part in how our nation functions and looks after each other. And I think it has to start winning the battle about how social care is kind of portrayed, represented, understood. And that might be difficult, and media is changing. There's no easy way to do it, but I think it's something that continues to be a problem for the sector.
Mm-hmm. It's interesting. I mean, one of the it wasn't the primary reason, but one of the reasons why I decided to set up the Care Home Show was to try and push at least a more objective kind of view of what's going on, at least getting people's perspectives, so that to the extent that you can, that we could create at least internally a more positive narrative about what was going on in the sector, to be able to go and share some of those kind of the good news stories, if you like. And even if it alters things just a tiny little bit for a group of people, then hopefully that's a good thing. How you change the general populace's perception on care, I mean, there's a big question that's way above my pay grade, but I think it is it's important, and I think it's something that a lot of people, as you say, they just don't understand the dynamics of it. And when you start talking to them again, you do get that kind of glassy-eyed approach of, doesn't really apply to me, so I don't care. You will care at the point where great Auntie Agatha trips over and smashes a hip, and she's coming out of hospital, and she needs to now go and find some type of care service. And the education process around that has to around how to deal with that then has to obviously. You have to learn what to do in that set of circumstances very quickly, and then suddenly it's the top of the agenda rather than being something that isn't even on the agenda at all. So,
whereas we all know what we would do if we broke our leg leaving this office today, if we fell over or got hit by a bus or whatever.
Exactly.
You're in an ambulance. You're in the healthcare system. You're going to be rehabilitated. The point where the inflection point where this suddenly becomes social care. And, it's really related to age. And so I think the system, I mean, Martin Green at Care England is quite consistent in arguing that the system is effectively ageist. And, I think he's right. And, so you put ourselves in the same position as elderly relatives, you can have exactly the same experience. And one thing could, cost you a skiing trip, and the other one could cost you your house,
Yeah, exactly. It's an interesting way to put it, and one that I think people will reflect on a lot. I feel like we've only really touched the surface with a lot of this stuff. You and me spend a reasonable amount of time talking about interesting things about the sector anyway. So hopefully we'll have an opportunity to get you again in the future, go and see how things are changing over time, because it's definitely a dynamic marketplace. So it will be interesting to see what does happen from a political standpoint, from an economical standpoint, from an operator perspective. There's a whole world of potential change out there. So 6 to 12 months down the line, it'll be interesting to see what conversations we do have. But I like to be able to wrap these conversations up with just a couple of questions. And I think the first one is, what's the best piece of advice you've ever received personally?
Well, I think when I think back to when I first started in journalism, this was actually before I went to university. I took a year out because I originally got in to do law, and then I realised that it looked awfully difficult, and you'd have to read a lot of books and work incredibly hard. So I took a year out to think about what I wanted to do before I kind of committed to a degree. And so I ended up working for a bunch of journalists in Glasgow who were all sort of connected to the Glasgow Herald. And it was a really interesting kind of year. And one of the things that the piece of advice that kind of stuck with me is that when you're interviewing someone who's an expert on a topic, which is, for better or worse, what I've been doing for quite a long time through Health Investor, is don't be afraid to look or sound stupid. The onus is on the expert to explain it to you. You're not meant to pretend you understand something if you don't. So I think what I've tried to do over the years has been studiously insistent on not pretending I understand something until I do, and trying to talk to the people in the market who really are the experts. And that's the bit about my job I love. That's the bit about where we sit in the sector, where I think what makes us interesting, makes us relevant, is talking to the people who really do understand stuff. And if we can be a medium or a platform for their expertise to get out into the sector, then fantastic. We can be that kind of that forum or that channel to get that information out. So best piece of advice I got was, don't try and understand something when you don't.
So there's all sorts of people out there kind of advocating the fake it until you make it type thing. I guess it's almost like the opposite end of the spectrum. It's just be honest and
I've still got to make it first.
Yeah. Great piece of advice, though. Thank you for sharing that. And the last question, just to wrap things up. So, if you were to give a piece of advice to somebody looking to make a positive impact in the UK, let's say healthcare market, just because obviously the kind of with what you do, it spans more than just the care home sector. But yeah, what would that piece of advice be if somebody was looking to make a positive impact?
So this doesn't happen that regularly, but maybe kind of three, 4 times a year, I'll get an approach from someone who I either don't know or it has been sort of referred to me by someone in the sector that we are mutual acquaintance with. And typically it's someone who's raised money, who wants to come into the market, but they either have no track record or they have a team lined up that they might be able to kind of put into play if they can. But really what they want to do is they want to access the market. They're keen on the sector and they want to deploy capital into it. And my advice to those people when I see them is to think as carefully and for as long as you can afford to about where you go into the market and how you go into the market, because I think it's a very interesting sector, because from a kind of demographic or fundamentals point of view, it's very easy to kind of be won over by the argument for investing into the sector. But I think anyone who's been around the market for a few years can see it's a very complex and quite a difficult market, and the variables are not that easy to control and not that easy to predict. So my view is it's better for people to make a late good decision than an early bad decision. So I think what the sector is strong at is it has lots of people with deep knowledge of it and deep knowledge of where investment has gone well and where it's gone badly. And I think the more of those people that you talk to, the more chance you have of making a beneficial investment into this market. Because I think, it's a bit of a kind of reductive term, but that idea of kind of smart capital or dumb money doesn't help the sector. It might help the individual who's selling, but that sort of money in the sector ultimately will lead to kind of conflict, lead to the breakdown of an investment. Whereas informed, patient sustained capital that can change, can adapt to changing circumstances, that's the sort of money that you want to come into the system, and that's the sort of money that will help the sector evolve, help the sector develop, and help the sector kind of mature.
I think that's really, really useful advice for a lot of people that are potentially thinking about making those types of investments. So, Vernon Baxter, it's been an absolute pleasure. Thank you so much for your time.
Cheers, Simon. Thank you.
Pleasure. And that's a wrap.